Only 7% of million-dollar loan applications get approved on the first try. That means 93% of people seeking life-changing capital are doing something fundamentally wrong. But what if you could position yourself in that elite 7%? How do banks decide who gets $1 million? It's not just about having perfect credit. Banks use something called the 5 C's of credit: character, capacity, capital, collateral, and conditions. Character refers to your credit history and reputation. Capacity measures your ability to repay based on income and debt ratios. Capital looks at your personal investment, while collateral represents assets you pledge against the loan. Conditions examine the purpose of the loan and external economic factors. For million-dollar loans, banks typically require a credit score above 720, debt-to-income ratio below 36%, and substantial collateral worth at least 70% of the loan value. Think of it like applying to an elite university, where they're not just looking at your GPA, but your entire profile. What documentation do you need for $1 million loan? Prepare for paperwork and lots of it. You'll need 3 years of personal and business tax returns, 6 months of bank statements, a detailed personal financial statement, proof of income, business plans with financial projections, and documentation of all assets and liabilities. Many applicants fail because they underestimate this preparation phase. Imagine showing up to climb Mount Everest without oxygen tanks. That's what approaching $1 million loan without proper documentation feels like. How can you improve your chances of approval? First, build relationships with bankers before you need money. A study by the Federal Reserve found that loan applicants with existing banking relationships received approval 31% more often than those without. Second, consider alternative lenders. Private equity firms, venture capitalists, and angel investors often provide million-dollar funding with different criteria than traditional banks. Third, structure your request strategically. Breaking down your million-dollar need into phases can make approval more likely. Banks prefer seeing a track record of smaller successes before funding the entire amount. What are the hidden costs of million-dollar loans? Beyond the obvious interest rates, be prepared for origination fees, typically 1–2% of the loan amount, appraisal costs, legal fees, and potentially higher insurance requirements. $1 million loan could easily include $20,000, 0 cents, $30, 0 cents in upfront costs. How long does the approval process take? For loans of this magnitude, expect 60 days from application to funding. The larger the loan, the more scrutiny it receives. Multiple committees must review and approve your application, and this takes time. Should you get a cosigner for $1 million loan? Having a financially strong cosigner can significantly increase approval odds, but this comes with serious considerations. Your cosigner becomes equally responsible for repayment, potentially affecting their borrowing capacity and credit score. What types of collateral work best? Real estate typically stands as the gold standard for collateral, but investment portfolios, business equipment, and even intellectual property can work. The key is providing collateral that maintains value and can be easily liquidated if necessary. Because securing personal loans of this magnitude often proves challenging for individuals without established businesses, the next video reveals how to structure and obtain $1 million business loan with significantly higher approval rates, even if you're just starting out with limited personal assets.